What's good, YouTube? It's your boy Be Easy, and man, listen, yeah, we are back with another banger, guys. And whether the price is up or down, we keep a mound to pitch from. So, the title of this video will be called AMC: Easy to short, hard to long, or has it been hard too long? And obviously, so, guys, all of those things, former, being true. So, let's start off with the cost to borrow, guys. Why hasn't the cost to borrow moved? In this case, highly volatile stocks signify that the cost to borrow should be going up through the roof. Certain stocks have like a cost to borrow of like 100% or very vast amounts. This thing is, I think, set at 1% or lower for like the last several months on end. If that's not weird, I don't know what is. Next talking point, guys. BlackRock bought a bunch of real estate last year. Now that's funny, seeing as how Zillow wasn't even willing to go out on that limb to go out and buy that overpriced, very unattractive real estate market that they had in 2021. So with that said, guys, if Zillow wouldn't even touch the real estate, why in the heck would BlackRock do so? So that led me to put on my DD cap and just start thinking about the possibilities. Allegedly, if your China Evergrande bonds has lost their value so much and their real estate has went to the crapper, why not put some U.S. real estate up for collateral? And as you know, BlackRock went out there in the public and disclosed to everybody, hey, our margin's great, signifying that they probably will be the last person margin called out of any of these asset management funds, hedge funds, and things of that nature. So let's not count on that happening. And that, probably has to do with lose vids, is talking about the small D's, what does he call them? I forgot them. But the small D's, the little D's, to get margin called. And that is a concern as far as Bloomberg Financial is concerned, because I watch a lot of that as well. So they're saying margin is very close, and yeah, so that's what I'm thinking they did with those U.S. Real estate market that they bought up last year, that they went and said they bought, then they went and had another article that said they didn't buy anything. I don't know what's going on, but all of a sudden their margin's great. Evergrande went to crap, but they used the U.S. real estate, allegedly possible, for the new collateral. Just a possibility, guys, something to think about. Again, BlackRock did increase their share count from 30 million to about 39 million, an increase of 9 million, which was about a third of 30 million, but 25% of the total 40 million. So a thought on that, guys, would be if 30 million shares lasted about a year, as I said, they're pinging them back and forth until they can't anymore with the numbers. Maybe they run out of space here and there for numbers, so they get an extra additional shares to add a little cushion in. That gives me a thought process that they can ping those 9 million shares for about a quarter of the year, maybe a third of the year, right? Giving us, on this channel, we had the date of December 15th or 16th as the MOAS start date, but possibly that could be the April date that we went with the backup date, because there was, as far as the as far as the capital gains was concerned, in our former video that we put out with our MOAS prediction date, that's what I thought this was a play on, the capital gains, as well as to elongate this thing for as long as possible, to play the game, maybe shake some weak hands, as many as they could, and obviously to derail the options chain and the gamma squeeze and things of that nature. So that was part of the plan. Another thing about that quick, the low volume discourages options. So, that could lead to the fact that maybe they don't want the gamma ramps and things of that nature in options, and really hurt these short sellers with those people that may or may not exercise those options. So something to think about. So again, MOAS date I have as of April date on a Wednesday or a Thursday. As we know, Wednesdays are the least liquid days for retail. That's my theory on the Wednesday or Thursday thing. So just to give you how my thought process works, if you guys have been following on this channel, we stay ahead of the curve here, guys. I'm not sure if you've been watching my last video, man. These guys are they're catching up. Anyways, next talking point, guys. Where's the Actors Guild? If we're talking about the silver screen, I mean, isn't that generally where actors like to be seen, on the big screen there? And shout out to Nicole Kidman. Maybe she's the only ape we have as far as actors and actresses are concerned, because they should be out here lobbying for the theaters to be remaining intact as our primary source of big screen movies. Even though we got a big 80-inch screens in our house and things of that nature, it's just not the same for me. Just not the same experience, guys. And as we see with the numbers on Spider-Man, movie theaters ain't going anywhere. So your short thesis has not been confirmed. And in fact, it's been denied. Like Matumbo, sir. So get that shot out of here. All right. We don't know where the Actors Guild is. So next talking point, guys. Not just something quick we're going to touch on. They just look a little too happy in their bankruptcy pictures. I forgot who it was recently. It wasn't Melvin Capital, but it was one of those guys. All these guys, these hedgies that's going out, they're just, yeah, we're out. I would be livid if I was out, because I was too prideful to realize that shorting a stock like AMC and GameStop, which is beloved by the public and the American people, that's not American to short these stocks, guys. What are you talking about? What are you talking about, man? That is not so un-American to go against the general public and say, hey, you guys are idiots. And as you see what England just did with their lifting of the COVID bans, that's interesting to see. As you know, the U.S. likes to follow what Europe does in a lot of ways. So we'll see what happens with that. Let's keep an eye on it. Talked about the low volume discouraging options, which brought me to another question, would be like, are they even hedging at this point? I mean, let's be real, guys. You know, you guys, we all know, like, most people don't usually exercise options, but puts in the money, on the other hand, are automatically exercised on expiration. So let's do the math here, guys. We got BlackRock with an additional 9 million shares. Then we have those puts that expired in the money this last week, which was the most highest open interest that we've seen in a while. There was about 16 million shares that are automatically exercised. Now, how does that work with T+2 data and, you know, the way they've been manipulating the stock, and also as far as the dark pool is concerned? I don't know how that additional 16 million and 9 million shares will put us at about 25 million shares that they would have to generally, say, play with, for example. A lot of math going on here, a lot of number crunching. Just something to continue to watch, guys, as to see. We know there's 25 million shares being sold, and we know that in that Lou experiment, which I didn't participate in. I'm not a person that does things like that. I'm a thinker on my own, guys. I like to do my own thing. When the crowd usually is doing something, I like to do other things, which is why, again, on this channel, we don't fret, we don't fear, we're not scared, we're not afraid to say the things that other channels are kind of maybe afraid to say, or they don't think in that manner, or they don't have the capabilities, or they're just scared to touch these type of talking points that I'm going to go out and blatantly say. So the puts in the money, let's talk about the price prediction for, as I told you guys in the last video, signified by the news articles that I was reading, just told me that the price was going to be going down for the rest of the month. As I said, they cannot give us obvious mishaps. You know what I mean? They can't say, oh, look at meme stocks going down for the count, and then the next day just moass. No, That's what I'm trying to say. Like, it's going to be a process. It's going to be played out over several days, weeks, months, and possibly years, guys. Which I always talk about. I'm going long on AMC. Now, what's wrong with that? This is what upset me. When the price hit $72, a lot of these news media pundits went out and said, "Hey, you should have took some profits. You gotta learn. You young retail apes gotta learn to take profits off the table." But what if I'm going long? What if I want to hold this thing for 10, 20 years? I mean, you can't tell me when to take profits, which is another one of their schemes, guys. You gotta pay attention to what's going on. So that is thing. So I was talking about the price prediction, guys. I have a triple bottom in my thought process. As we know, AMC in general likes to do triple tests, even quadruple tests. Usually on that fourth test, we'll see a breakthrough or a reversal or things of that nature. So I'm going with the stay consistent theme of triple bottom happening here. And I did do a little DD on the charts, as I don't like to do on this stock, but we were looking at a 13.18 bottom and a 14, I think it was a 61. So I had a 14.61 to a 13.18 in between there, triple bottoming off of that mark, and eventually moving upwards. So if we have a triple bottom, judging by the time price, and this is just me going right now, we're looking at about a 2 week, maybe week or two, as far as the triple bottom playing out, 2 to 3 weeks, something like that, give or take. So that's the price prediction, guys. Volatility, as I explained, I said it's not going to go to $5 or $10, but it will be volatile. It will be a fun ride, to say the least. Because my thoughts on this thing, hey, I mean, it's only money, guys. You know, Nas had a great quote, which was, "Rich men died and tried, but none of it worked. They just rob your grave. I'd rather be alive and paid before my numbers call history's name." So quick take on that. That's our price prediction. So our next talking point will be, okay, so I forgot this to add this in there as far as them trying to encourage us to take profits off the table at $72 and things of that nature. What if I'm going long for 10 years and I see way higher upside? I don't know if you guys know this, but AMC has a few theaters in which they have those 3D thrill rides, and like out in Texas and certain bigger theaters. If we could get those things in, you know, more locations per se, that's definitely going to bring an upside to the stock, guys. Those 3D thrill rides are something to experience. So we'll move on from there. The share lending process is our next talking point now. Thomas James had a great video. I mean, obviously anybody can do the math, but he went and did it, which was saying that they had a 1% yearly percentage rate on the gains as far as the the premiums that they were collecting on the share lending. They lost more in the short sell. So that's confusing, right? Why would I want to keep share lending if I'm losing more on shorting the stock? And that led me to think about, what is the actual premiums that they're collecting, guys? Come on. They're saying that it's only about 5 to 10% of their business model, when actual data from Peter Byrne, I believe it was, one of those guys that was exposing the market, that said it's actually 75% of their business model. Share lending, 75% of their business model. You do the math on a stock like these so-called meme stocks, which I told you guys I have a big problem with. AMC is a reputable company, guys. GME as well, who is very much diversifying their business models as we speak, making it a stronger representative of the company. So moving forward, their short thesis is going to get wrecked, clearly. So that's why I'm going long. Spider-Man, by the way, still doing numbers. Still doing numbers. Love to see it. So the share lending profits, 75% of some of their business models. What's the real numbers, guys? Get this data out of my face. The data just upsets me. When you're looking at me and you're saying, hey, I only made $1 million in share lending, but I lost 100 million in shorting. Well, why the heck are you still doing it? Doesn't seem profitable unless the dark pools are the real share lending. But that's allegedly, guys, so we'll leave it there. Okay. I guess our last talking point of the night, guys, will be the AMC streaming app. Why haven't they done an exclusive rights deal to the streaming app to give us only AMC stock investor holders early access to the movies, early access to movie releases that will be in the theaters? I think that's a great idea. Oh, this isn't on the screen here, guys, but Netflix took a big hit. I don't know what that means, but what does that mean, right? If the theaters are taking hits and a company like Netflix is going to show their earnings coming up soon, and they're taking a big hit before earnings, which is weird because last year we saw the opposite in 2021, which was companies had earnings and then boom, shorts came right in. Like literally at earnings, at or around earnings, right before, day before, same day, next day type stuff. We saw a lot of that last year, but this term we saw pre-earnings short. A little weird. They're trying to switch up the predictability, as they know a lot of new investors have seen last year's, as you see what happened with Peloton, which was very weird. Peloton won't be making bikes. Hey, CEO of Peloton, that's not true. Week later, stock goes back up. Weird stuff going on. So I guess that's all of our talking points. I got a great video in mind for my next video. I probably got like 5 videos lined up in my head, but I gotta start releasing these things. That last 30-minute video, I don't like it because that's too long. So we're gonna leave it here, guys. As I told you guys, I filled out my beneficiary. Stay tuned for more.